What's up, guys? It's Larry, the mortgage guy, your mortgage insider. And today we're going to talk about how I believe the VA loan can potentially be faster in closing or close faster than other loans. And I'm going to offer my information, why I think that proves it, and also scenarios that you might not be considering. So we're going to go ahead and get started. Now, I'm going to share my slides here. If you do have any questions, just you can always ask it by unmuting if you're on Zoom, or you can put in the comments, and I will do my best to address it. Okay. So again, this is Larry, the mortgage guy, your mortgage insider, and we are going to. Where's my share thing? Here it is. And we're going to go over, the VA loan and nuances and myths that people have about it. Okay. So, quick introduction. My name is Larry Lee with Van Dyke Mortgage. I am a certified veteran mortgage advisor. I'm a branch manager, and I'm licensed since 2016. And I always joke about how the fact that, even though I was licensed in 2016, it felt like it was just yesterday because, someone was asking my wife how long she's been in the mortgage business. And I told him a couple of years, and she's like, it's been like 5 years. So of course I've been in the business longer than her because I'm the one who brought her in. So yeah, it's kind of blew my mind when I realized that we've been in the business for that long, right? So I also have a side hustle as a social media marketing coach and running my own agency. The reason why I bring that up is because I'm trying to use my social media abilities and access to promote my passion, which is doing mortgages, especially the VA loan. So I'm basically marrying my two passions together, right? I'm licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. Okay. My mission is that I love the mortgage business, but I was fed up with the lack of education. I'm gonna move this real quick here. I was fed up with the lack of education and information clients were provided during their application process. So I created a first-time home buyer coaching class for mortgage clients that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. What I mean by that is I designed a class and content so that people can actually find the information without having to talk to me or any other lender. They don't have to opt in. They don't have to give the information. It's on demand because a lot of people are intimidated by salespeople like myself, because that's what we are: loan officers and real estate agents. We're salespeople. They're intimidated by us and they don't want to engage with us, and therefore they don't get the information that they deserve, right? And loan officers, when they do engage with them, they do a horrible job of fully informing them, probably for the most part laziness, right? I also provide one-on-one coaching for those who want it. Of course, you do have to engage. You do have to make me aware that you are who you are if you do want one-on-one coaching. Of course, you can always ask me questions anonymously, like you can have like a fake account or whatever. But for me to actually give you like real coaching while you're going through the process, I would have to be involved with you, right? Someone's asking a question. Let me check real quick. Are you auto muted? Just want to make sure. I don't know, but let me make sure everyone is allowed to talk, but you can also mute yourself as well, right? I just want to make sure here. Give me a second. Make sure. Looks like everyone's muted. Okay. Yeah, it looks like everyone's muted, so we should be good. Okay. All right. Unlike other loan officers, I made it my passion to coach first-time home buyers on the mortgage process, and that makes all the difference of how I helped hundreds of people get on the right path to homeownership, with many of them becoming homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step on the home purchasing process, like they did. The home buying process is very confusing to most people, but that is why I am here, to simplify the process and make sure you're 100% prepared in the home buying process and to become ahead of the competition. And what I mean by ahead of the competition, I'm literally saying that you're out there competing against other buyers for homes, right? So my goal is to make it so that, when you are out there making offers and such, you are way more prepared and you're more empowered and equipped, right? One of the ways I do that is actually provide TBD pre-approvals or fully underwritten pre-approvals. That means I will underwrite you as a client 100% as far as I can without a property, right? And then get you to the point where you're conditionally approved. And the only conditions are going to be the property address and the actual appraisal. Once we get those two, then you're done, right? So basically you're clear to close minus the property. That's basically the whole point. So when you make offers, you're going to have a loan commitment you can provide. So you know how there some contracts provide for like a 14-day or 21-day loan commitment contingency. You don't need that anymore. I have it and you can send it to you right away. So it's almost as good as cash. Okay. So that's one way I try to help people become ahead of competition. Okay. All right. Next slide is, that's my certificate. I'm very proud of it. That's why I put that there. And my why, real quickly, my wife and my kids, namely my boys, Bruce and Hunter, because they're on the spectrum for autism. They're nonverbal. And I want to get them ABA therapy because I was told that it was a game changer by people that I trust. So my goal this year is to acquire enough resources to provide that for them. And also my other why is, of course, veterans. And this slide actually explains my why regarding the veterans. It's something I posted on social media. Okay. My father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat. It was US soldiers who helped them get in the helicopter and on that boat. They met in Hong Kong, China. If it wasn't for a US soldier, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those US soldiers are more than likely veterans now. So thank you, vets. I owe you my life. And I really do feel that I owe a debt of gratitude because if it wasn't for US military and soldiers that were helping people during the Vietnam War, a lot of people would have died and their children would exist and their grandchildren would exist, which of course includes myself and my children, right? So what is the VA home loan? It's a VA loan that is a mortgage guaranteed by the U.S. Department of Veteran Affairs and is issued by a private lender, such as a bank, credit union, or mortgage company. A lot of people get this confused. I think they think the VA is the one actually lending the money, and they do not. It's lenders like myself and mortgage companies and banks that lends the money. It's just the VA is willing to guarantee the loan if something were to happen, namely a default, right? So if someone were to default on a loan, meaning a loan that we provided them, the VA is willing to pay a guarantee to the lender up to 25%, right? And that's kind of like the down payment. That's why there's no down payment needed for the VA loan, because the VA themselves are guaranteed. Because the whole point of down payment is to sort of protect the interest of the lender, but also have some equity, right? So the VA is basically saying you're guaranteed 25% equity no matter what happens. Okay, that's basically what's happening. Okay, all right. Before I get deep into why I believe the VA loan can close faster, I'm going to talk about the opportunity of why you should make the VA loan your number one priority if you're a real estate agent, right? It should be your niche. But a lot of this is going to add to why I think VA loans close faster. Okay. Millennials and Gen Z pushed VA loans to a record in 2021. Millennial and Gen Z veterans accounted for more than half of all VA purchase loans in a record year for the historic benefit program. According to National Mortgage News, Gen Z in particular is starting to make its presence felt in markets across the country. Non-veteran millennials struggle, whereas veteran millennials thrive. Okay. So let me read that again. Non-veteran millennials, which is, I'm pretty sure most of you guys on this call can agree that's probably the biggest generation right now that's buying, millennials, right? So non-veteran millennials are struggling and veteran millennials are thriving. Okay. And despite many non-military millennials having a tough time buying homes, often saddled with student debt and working to save for a down payment, millennial and Gen Z veterans accounted for half of all VA purchase loans in fiscal year 2020, according to the Chicago Tribune. So many millennials are stuck on the sidelines because they don't have great credit. They don't have the savings for down payment. They continued. Younger veterans and service members are really ahead of the curve when it comes to home buying compared with their civilian counterparts. So basically, because of the way VA loan works, there's no requirement for a down payment, right? So whereas millennials who are struggling because they're trying to save a down payment, the VA doesn't require a down payment. And again, student debt, a lot of millennials have student debts. Well, if you're served, you probably have a GI Bill and you probably had the VA pay for your education. You don't have debts because of it, but that's not always the case. Okay. But most people who are veterans who are going to school, they have the GI Bill to help them. Okay. VA loans outperformed all other loans in 2021. And this is actually kind of, again, adding to my contention, right? It shows that in comparison, in June 2021, more VA loans closed successfully than all other mortgages, right? So this is actually what the quote says. Today, VA loans actually close at a higher rate than conventional mortgages. For all home purchases in June 2021, 70% of VA loans successfully closed, compared to 51% of all mortgages, according to Ellie Mae, a mortgage application software company. Ellie Mae is the one that runs Encompass, which is basically the default or the most used loan origination software. So basically, they know, I mean, what loans are being structured across the country. Okay, and they're being utilized more often as well. Data from the Department of Veteran Affairs Veterans show that the number of VA loans went up 8% year over year in 2021, marking the 10th consecutive year of growth. Okay, so not only is the more than half of the VA loans are being used by millennials and such, but it's also a loan that's growing in terms of usage. Okay, so VA loans are more flexible than buying power. This is, again, another reason why, or it's going to add to my contention as to why I think VA loans will close faster. Okay, the VA loans typically have a lower interest rate than conventional mortgages, allow for higher debt to income ratios and lower credit scores, and they don't require private mortgage insurance. If you can qualify, the VA loan is the best option, best program out there. Let me read that first part again. The VA loans typically have lower interest rates than conventional mortgages. They allow for higher debt to income ratios and lower credit scores. Okay. It's really important that you understand that when in comparison to like a conventional loan. Okay. All right. So again, it's knocking opportunity, right? The military is USA's largest employer with over 3.1 million employees worldwide. There's over 1.4 million VA loans originate in 2021. Veteran home ownership exceeds the national average by 20%. What that means is that if you were to compare the veteran population versus the civilian population, the ownership percentage of veterans is 20% higher than the general population. So basically, veterans are more likely by 20% to own a home than the civilian population. Okay. So again, it's a good niche, right? Military personnel continues to relocate every 2 to 5 years, and career service members move numerous times, which means repeat purchase business. Okay. And that's something that I think a lot of people who are in niching or are focused on VA loans, they understand that there's a lot of benefit in helping veterans because they're going to move more than your typical home buyer. Okay. So it's a good relationship to have. Okay. Texas had 1,435,787 veteran residents in 2021, and the number is climbing. And the reason I'm bringing up Texas because that's where I'm local to. Okay. Texas also had 34 billion of VA purchases in 2021. 28.2% of Texas veterans have a service-connected disability. The reason why that's important is in some states, I actually just learned last week that North Carolina joined one of these states, but in some states there's tax benefits to that they provide to veterans who have any kind of service-connected disability, up to the point where they don't pay any property taxes. Okay, so that's a pretty cool benefit because it gives you more buying power. Okay, all right. So homeownership statistics. Okay, only 24% of qualified veteran homeowners are currently using their VA loan benefits. So out of 100 veterans, only 24 of them are using the VA loan. That's shocking. Okay. Less than 5 years ago, only 12% of veterans were using their VA loan benefits, but it's slowly growing due to the growing awareness among internet savvy veterans. So what that's saying is that out of 100 veterans who might qualify for the VA loan, only 12% of them are actually using it. Why? That's just crazy, right? I mean, that means every veteran you meet, there's a chance that they actually might qualify for the VA loan, but they're not owning a home, right? So again, opportunity, right? 33% of veterans that have a mortgage indicated they did not know about the VA program. Again, that's unheard of. That's 1/3 of all veterans that have a mortgage right now. That means they own a home. They did not know about the VA program. Why? Right? And 46% of veterans reported their lender had not brought up the VA loan option. And to me, that's crazy as well. That's almost half of the loan officers out there, half of the people that are like me are not talking about the VA loan to veterans. That is, it's wrong. It's just wrong, right? So the point I'm making with this slide is that there's a lot of opportunity for growth, and it's just showing that people are not taking opportunity of the actual potential there. Okay. So 3 mandatory questions that you should ask every person that's getting ready to buy a house or getting ready to apply. Okay, number one, are you a spouse or veteran? And when I say three mandatory questions, you actually only need to ask one. And if they answer yes, then you ask the rest of the questions. If they say no, then of course you just move on, right? But yeah, are you a spouse? Are you or your spouse a veteran? And if they say yes, are you entitled to a disability from the VA? Because of course that helps with the way you would structure the deal, especially when it comes to property taxes, depending on what state you're in. And do you have your certificate of eligibility yet? Because a certificate of eligibility tells you everything about what they can borrow or they can use in terms of their entitlement for the VA loan. Okay. Now, the reason why I want to encourage everyone on this call why you should ask this question, or the first one at least, is even though it might be awkward to ask every single person, I feel awkward sometimes when I ask someone, even if I feel like they're probably not a veteran, I can't really judge, right? Um, if you do ask someone and they are a veteran, it can change the whole course of the conversation. It actually can create an even better situation. Like you saw the statistics, more than half, or actually not more than half, 46% of the people who have a VA loan, or not a VA loan, they have a mortgage, did not know or actually, no, I'm sorry. The statistic is 33% of the people who bought a home that's a veteran did not know about the VA loan. And 46% of those people said that their lender did not even mention the VA loan. Okay. So you can literally be a game changer. You can actually be ahead of the curve. You can stand out if you ask a question that 46% of other lenders didn't ask. Okay. Because if you do ask a person if they're a veteran or not, or if their spouse is a veteran, and they are, and it changes the course of the conversation, and they find out about the VA loan, the 33% who didn't know about it, if they find out about the VA loan, you will look like a superstar. You will look like a hero when you tell them that they can potentially buy with zero down. Okay. So even though if you ask the question and it's a civilian and they're like, what? No, and you're like, oh, you just move on, that might have been a small slowdown on the conversation. But if you do ask a veteran that question and they say yes, then that can be like the reason why you're their trusted advisor and not someone else's. Okay. So hopefully that lands with you guys. Okay. So now we're going to talk about the topic at hand. Okay. We do a class called myth busting. I always mess up when I say that. And I've already gone over the zero down is a weak buyer myth, and I busted that one. So if you want to see replays on that, I have it in my replay list, which you will get through email. And I also busted the myth about VA loans being harder to get through underwriting. I also addressed the appraisal one because someone asked about that question. So I actually finished 1, 2, and 6. Now I'm going to address number 3. VA loans take longer to close. Okay. So the myth is the VA loans take longer to close. This is the general mindset, I would say, with a lot of people in the industry, and therefore it scares people. And I don't want to say who in particular, but it scares people into accepting VA offers, right? It scares people into even considering any kind of offer that's related to the VA loan. Okay. The truth is the VA is not the one who approves or denies the loan. It's the lender. So what I mean by that is you can't really judge the VA as a whole based on isolated incidents. I mean, I'm not saying it's discrimination, but it's a form of discrimination because you're basically saying, oh, I've heard that VA loans are really tough or they take whatever. You're hearing about a few incidents and you're basically across the board judging the entire VA loan in general. And that's not the way you should look at it. It's not the VA that's tough. It's the lender that's screwing up, that's making it tough. Okay. So 99% of all lenders have automatic underwriting authority. What that means is that you don't have to go to the VA to make decisions. We, as the lenders, can make the decisions. Again, you can't really put it on the VA. It's actually the lender, right? And I put not all lenders are created equal. And I don't want to have to name names, but just think about any of these larger institutions that are focused or marketing to the VA or VA loan, and just kind of think about the kind of organization they are and the people that work for them and the type of quality of service they provide versus like your local lender. Okay. Look up some reviews and you'll see what I'm trying to get you to think about. Okay. maybe the reason why people think VA loans take longer to close is because a lot of VA loans are handled by these large aggregate big box lenders who have loan officers who are working on a salary or an hourly wage. Okay, so just take my advice and look up those reviews. Okay, again, I think the VA loan is a bad rep because it's the people that are handling it that's messing it up, not the VA loan in general. Okay, the VA and the RLC is more interested in putting veterans in homes than denying them. Okay, again, let me repeat that. The VA and the RLC is the Regional Loan Center. Okay, now I'll talk about that a little bit more later on. They're more interested in putting veterans in homes than denying them. So they're actually interested in helping veterans get into homes, and they're not all about denying people. That's not what their goal is. Their goal is to help find a way. And I'll explain to you a process where it proves that. Okay. RLC can grant exceptions and ultimately close loans, whereas other loan products don't have such an option. What I mean by that is if you encounter a scenario where the underwriter doesn't agree or doesn't think that we can close this loan or doesn't think that this person can be approved, you can actually go over the underwriter and talk to the regional loan center. And if it makes sense to them, they actually can say, yes, this makes sense to us. We'll go ahead and approve this. And by providing that response, we can actually submit it to the underwriters and they have to accept it as, basically an exception that's, literally endorsed by the VA. Okay. You can't really do that with a conventional or USDA or FHA. There's no regional loan center for the FHA. There's no regional loan center for the conventional loan. There's no regional loan center for the USDA, really, right? So you can't seek an exception. If the underwriter turns it down, the underwriter turns it down. But for us, if the underwriter turns it down with the VA, we can actually go to the VA directly and find out what they think about it, right? So there's another layer of possibilities to get loans approved, right? And yeah, that might take a little bit longer, but you're dead in the water when it comes to conventional FHA and USDA. So if you want to talk about loans closing faster, you're not going to close those loans. But in the VA, there's a chance you can still close it. Okay. So it's a process, but it can give you a closing versus a non-closing. Okay. The average VA loan closed within 5 days of conventional from application to closing. Okay. So on average, right, the VA loan closed within 5 days. So that's not really a dramatic difference. Okay. And we want to note that the national average for time to close on all loan products Originate year to date is 48 days. A good lender won't find themselves in the average. And the point we're making is that if you look at all loan products, they close average year to date 48 days. And a lot of it is because a lot of these loans are being originated and managed by people who don't know what they're doing, or they don't care, or they don't have a process to close fast, right? That's not what they're interested in, right? They really don't care about timelines or ECDs or estimated closing dates. They just close the loans whenever they close a loan. Okay. So there's a lot of skewing of the statistics there. Okay. All right. So does anyone have any questions on what I just brought up? And I did kind of do almost like a 30-minute info dump. So I didn't really slow down for any questions. So does anyone have questions before I move on to the next slide? And just so you know, I'm actually controlling my screen, but using another screen. So my mouse, even though I'm looking at my right monitor, my mouse is actually on my left monitor. So I think you guys who are in Zoom actually see what I'm talking about. No questions? Okay. I feel like I'm going fast, but it's been 30 minutes, so maybe I'm not going that fast. All right. Referring to the past myth, right? And I'm going to lower this real quick right here. It's covering my slide. No questions. All right. Referring to a past myth that I busted, VA loans are hard to get through underwriting, right? The truth is, underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving loan applications for every qualified veteran. That's out of the VA guidelines. Okay, and then Bill White, who helped as part of the VA loan, the inception of it. As long as lenders document the reasoning, it's extremely unlikely the VA staff would ever take issue with their decision. Again, you have to think about the fact that the VA is in the business of putting veterans in homes, right? And I actually watched a video that was created by some of my coworkers that gave a really cool story. The idea behind the VA loan is a lot of these men and, well, actually it was, I think it might have been men and women, but they were kept saying boys. But a lot of these guys, people who are active military were out there fighting wars and defending our country. and they didn't have the time to build their credit. They didn't have the time to make the money to get a down payment together, right? That's kind of the whole point. Is like, okay, well, you're back home. We want you to be able to buy a house, but we know that you don't have any credit, and we know that you have no money. So we're going to create a little exception for you. We're going to create what we call the VA loan, and we're not going to require you to put anything down because you kind of already paid your down payment by basically putting your body as a down payment. You sacrifice your body, you sacrifice your potential death, you would sacrifice your your little like blood and your sweat and your efforts and your energy. You sacrifice that was your down payment, right? So we're going to go ahead and just guarantee the loan for you, right? And you don't have to have a perfect credit score. You don't have to have a 640. We actually have no credit requirement, which a lot of people don't know that, right? The VA loan actually doesn't have a credit requirement. That's a lender requirement, not a VA requirement. The VA literally has no credit number requirement, right? So if someone tells you the VA won't approve anything below 580, that's not a true answer. It's the lender won't approve anything below 580. The VA will approve whatever it makes sense to them. Okay. So yeah, they don't have a credit requirement or anything like that. Okay. So that's how the VA loan is built. Now, the reason I'm bringing all this up is because I want you to understand the attitude that these people have when it comes to approving loans and getting loans underwritten is they're trying to find solutions. They're trying to find ways to help the veteran, right? Whereas other loans don't care. It's literally black and white with them. You know what I'm saying? If you don't qualify, you don't qualify, right? So that actually becomes important whenever it comes to closing loans, obviously, right? So you might have a process that you have to follow with the VA, but it's a lot better than someone from the conventional side saying, well, it is what it is, you just don't qualify and there's no closing. So in that case, the VA loan beats the non-closing conventional loan, right? So again, that's a contention I'm making, but there's actually real reasons why I think it actually can close faster. Okay. Actually, I don't need that slide. I talked about the regional center, and I don't want to go over this too deeply because I went over this in another class. But the idea is the regional center is designed to help veterans. Okay, we can submit a scenario or question and get an official answer. If it makes sense to them, they'll actually approve it and they'll override the underwriter's decision. Right? They actually have an appraisal system. They have two processes that you can do to reconsider values because appraisals is becoming a pain point, right? A lot of loans are not being closed. A lot of loans are being delayed because the appraisal doesn't meet value, right? Well, when it comes to conventional and FHA USA, you're pretty much stuck with it. You pretty much can't do anything about it. I mean, you can always order another appraisal, praying that this other appraisal will give you the value. But let's just be real here. I mean, I would believe that most appraisers know what they're doing, right? So you're probably not going to get much of a difference if you get a second appraisal, right? But also you have to consider negotiations and such, right? And of course, it's a big headache for the seller if they realize their home doesn't appraise and the loan can't close because the people that were involved in the contract doesn't have the money to cover the overage or the shortage, right? Whereas the VA, you actually can contend the appraisal. It's called the Tidewater process, where let's say the house doesn't meet value, then the appraiser actually gives you 40 hours to provide comps to try to meet value. And of course, if it does meet value, then great, we're done. But if it doesn't, then of course, the appraiser has to submit what they believe the value is, right? They send it to the lender. And then the next step could be the reconsideration of value, where the lender can basically disagree with the appraisal's decision in terms of the value and get the veteran to write a letter to request in writing a reconsideration of value. And if you document your reasoning and it makes sense, then the RLC or regional loan center might actually agree and basically supersede the appraisal. So let's say the appraisal doesn't meet value for whatever reason, and you think it's because they didn't really take into consideration the upgrades that were made or the size of the backyard. Let's say you're in a corner lot and your lot is larger than most lots, and there's not really comps that supports whatever, right? And of course, I'm just coming up with stuff top of my head because I'm not a real estate agent, so I don't understand how value works. But let's pretend that's one of the examples. Or let's say you have a fireplace that's made of a way better stone than your typical stone that was used by the builder when the houses were built 10 years ago, right? but there's no comp supporting it because there's no one that has the same kind of stone. You might be able to provide information and data and explanations and photos that can show the VA why you think the house is worth more, even if there's no historical comps. Okay. And right here, actually, I don't have it in the slide, but I thought I did. Oh, okay, right here. During this time, it is important to ensure that veterans continue to be able to purchase a home. VA, the lender, and the appraiser will work together during this time to assist in the best possible outcome for the veteran. And this is talking about the uncertainty of the market. This is talking about now. What's happening with the market now? Historical comps are hard to find because of the way the market's changing so much, right? So they're saying that because we understand this, we're aware of this, we still need to try to find a way to help the veterans get a home, right? So reconsideration value is a part of that. Okay. And of course, the last one, put VA guidelines generally talk about what cannot be done, but does not explicitly state what can be done. So basically, what I mean by that is they do list what is not allowed, but they don't really talk about what's not allowed. So you can actually come up with an idea outside the box or whatever and submit it to the VA, and they actually might be like, that actually makes sense. So we'll go and improve it, even though it's not explicitly explained inside the guidelines, right? It looks like someone has a question. Hold on one second. What if it doesn't meet appraisal because it's over appraised? Okay, I'm gonna put answer live. What do you mean over appraised? I don't know what you mean. You mean like the house value was higher than the offer price? Or because that's what it sounds like you're wording it, right? What if it doesn't meet appraisal because it's over appraised, right? Maybe you mean overpriced. That's maybe what that's what you're saying. I don't know. Okay, but can you please clarify that? Just want to make sure. Let's see here. Okay, you just said yes. So I'm assuming you're saying yes, that you meant if it's overpriced, right? And let me go and make sure I add people who needs to be added. A lot of talk, a lot of talk. Promote the panelists. I'm submitting promote the panelists. You don't have to accept it. It's just I don't know who I already tried to promote. So you can just ignore it if I do that and you're like, I don't want to be a panelist. Okay. So it sounds like the question is, what if the house doesn't appraise because it's overpriced? Well, yeah, that's a problem. And that's a problem in this market, right? The thing is, the reconsideration of value can actually help that more than a conventional loan, right? Because a conventional loan, it is what it is. Like I said, if you have a conventional appraiser look at the house and they give a value and that value is there and you submit comps or whatever, and there's not enough comps to support it, then the appraiser will be like, well, that's what I think it's worth. And that's it. Whereas in the VA loan, let's say the same situation happens, right? Same exact house, same exact situation where it doesn't appraise because the house is quote overpriced. Well, if you can justify what's overpriced, right? You can still at least get an increase in value, if not the whole thing, right? It depends. I think there's like a 15% threshold, but let's say you're short in value by 15% and you explain to the VA why you think the house is worth it because of, these comps or these upgrades or whatever. If it makes sense, they're going to, in their mind, they're going to go ahead and approve it. Now, again, you might not get all 15% that you're missing, right? Let's say it's overpriced by 15%, right? You might not get all 15%, but you might get an increase, right? Whereas with the conventional, that's it. There's no increase. It is what it is at that point. So you're actually better off with the VA when it comes to shortages on the appraisal, 100%. Okay, that's kind of the point I'm making, right? But of course, there's always the opportunity or situation where you might overprice it to the point where there's nothing that can be done. And that's going to be a problem no matter what. That's going to be a problem with the conventional and a VA, right? So to answer your question, the best way to answer your question is that, what if it's overpriced? Well, what if it's overpriced in conventional? What is the conventional people going to do? Nothing, right? At least with the VA, you actually have the chance to get a tie water, meaning get comps possibly. And if not, you can do reconsideration of value. That's something that no other loan has. So in that fight, VA wins 100%, right? Because again, let's say it's the same thing, VA conventional, same appraisal amount, same overpriced amount, right? What do you do if it's a conventional? Nothing. VA, you can submit a reconsideration of value, and you might get an exception granted. If you don't, at least you had a chance, right? But if you don't, then they're both the same. Conventional VA is the same, but at least you had a chance with the VA, right? And the VA will prove to you, right? Like the conventional, you might disagree with the appraiser, but you don't know unless you buy another appraisal, right? With the VA, if you submit a reconsideration of value, which so you know statistically, it's up to like 70% approval rate. What I mean by that is out of all the reconsideration of values, 70% of them were approved for some sort of increase, right? That's a huge success rate, right? So basically they're saying if you had an appraiser that didn't appraise and you submit to the regional loan center, you have a 70% chance of actually getting more. That's incredible, right? And the crazy thing is statistics show that only 1% of all appraisals that were undervalued with the VA loan were submitted for a reconsideration of value. That means 100 out of 100 lenders, only one of them sending it. So those other 99 lenders don't know what the hell they're doing. They're missing the boat, or they have no idea what they're doing, right? So let's say the 100 lenders, I'm one of them, right? And all of our appraisals were undervalued. Out of all of us, only I was the only one who submitted a reconsideration of value. The other 99 did not. That means the other 99 don't know anything. They don't know what they're doing. They're not helping the veteran at all. They're not helping the agents at all. They're literally just twiddling their thumbs and they're saying, hey, sorry, we're screwed. No, that's not how it works with the VA loan. And they just don't understand. See, and I'm glad we're talking about appraisals. We are trained as loan officers to not interact or engage with the appraiser, right? It's bad, it's unethical, it's illegal, it's not compliant, right? But in the VA, they actually encourage us to interact with the appraiser, right? If the appraiser says that, like I said, the two different processes, right? If the appraiser does not able to provide value right away, they give us a chance to talk to them and get comps, right? So they give us, the team, the lenders and the agents, they give us a chance to justify the higher price, right? If that doesn't work out, then we have the reconsideration of value. But it all involves us speaking to the appraiser. They're encouraging us to work with the appraiser. Again, if you read this, it says during this time, it is important to ensure that the veterans continue to be able to purchase a home. VA, the lender, and the appraiser will work together during this time to assist in the best possible outcome for the veteran. That's not the case for conventional, FHA, or USDA. Okay, so when it comes to appraisals, VA is superior bar none. That's why I love that class when I taught it. And again, if you haven't seen the class, you can look, probably, and I'm pretending this is a YouTube video, right? If you're watching this on YouTube, you can probably find the link somewhere, in the left of the screen. And if you're not on YouTube, you can probably find it in the replay that I send to you guys later. Okay, but I literally talk about how the VA appraisal obliterates the rest of the appraisal process. Okay, so to answer your question, and hold on, let me make sure. I think your name is Alitza. Sorry if I got your name wrong. Alitza, right? So to answer your question, what happens if it doesn't meet appraisal because it's overappraised? Well, what happens when in the conventional loan? What happens with the FHA loan? What happens with a USDA loan? Nothing. At least with us, we have a chance by sending it for a reconsideration of value to the regional, a reconsideration of value, or an ROV, to the RLC, which is the regional loan center, which is part of the VA. Okay, so that's what happens, right? We have a chance, whereas you have no chance with anyone else. Okay, hopefully I answered that question. I'll put it down here. Okay, and see if there's anyone else who joined. Let me go and add you guys in real quick. All right. I think I already talked about all this. Okay, so yeah, the VA guidelines generally talk about what cannot be done, but does not explicitly state what can be done. Okay. So yeah, that's one of the reasons why I think, again, the VA loan is just better in general, right? But let me talk about what I believe are potential reasons why the VA loan will close faster than normal loans. Okay. And these are more experience, based on experience, what I've seen. Okay. If the appraisal comes in too low, again, what happens with the conventional loan? What happens with FHA loan? What happens with a USD loan? Who knows, right? It just kind of It's just kind of like the elephant in the room. Like we have to address it, but nothing's happening right now. You got to renegotiate, or you got to turn on the loan or whatever, right? But in our case, which I just basically, sort of, I beat a dead horse basically, what we can do, right? So therefore, the VA loan can close faster because there's a process on that, on what happens. Whereas there's no process, what do we do if the appraisal doesn't come in, right? Especially if you don't have the funds to close, okay? The VA posts turn times. Okay, if you go to this website, you can actually see the turn times for all the different loan centers, and if they're one day past that time, meaning if they have a turn time and they're past that time, we can actually call the regional loan center and push them, right? So we actually have the authority to basically pressure them, right? Whereas when it comes to when it comes to other appraisers, we kind of are subject to their schedule, right? We're subject to what they do, what they play. So I've had times where I was supposed to get an appraisal back and I didn't hear from them for weeks. And we actually were emailing each other and texting each other. And the appraisal management company, whatever, literally said the person just fell off the face of the planet. Like they just literally are gone they're off the charts. There's no, we don't know where they're at, right? It turns out they were sick or they're in the hospital, whatever. But anyways, we had nothing to go with. We had no way of finding out what's going on. Whereas with the VA, they're responsible for making sure that they are in communication and everyone is on the same page, right? So there's a little bit of accountability for VA. So appraisals actually are easier to work around. They're easier to have expectations set than a lot of the other appraisals. Okay, so they post the turn time that you're actually looking at, and this is actually the slide that shows you an example what you would see, right? If you go to this website, it actually shows you the state and county, right? And it shows you like the turn times, right? Appraisal timeliness 10 business days, right? So basically, we should expect to hear from them within 10 days of the assignment being picked up. Okay, and they even tell us like what they think the value, or not the value, the average cost would be for an appraisal. Okay, so there's a timeline that they're expected to meet. Okay, so these are again through experience, right? Student loans that are in default or forbearance or CAVers. Okay, this is probably one of my biggest headaches back in 2019 and 2020, right? Student loans that were in forbearance or that they were in default, right? This was literally a deal breaker or deal killer. I've had loans that were under contract and we did a CAVer search and we found something from 20 years ago that was on their CAVers. So it wasn't a clear CAVers. And CAVer stands for Credit Alert Verification Reporting System. It's basically like a background check for government debt, right? And we would find debts from like 20 years ago that no one knew about. They didn't even know about it, like the borrowers. And because of that, they were denied, right? And of course, people were getting denied upfront as well. And it takes a long time to clear CAVers, sometimes 90 days, sometimes longer. I had a person who I told them the only way we're going to be able to approve you is if you get the CAVers cleared. And they're like, yeah, I'm working on it. And they were supposed to get it done within a month or so. And it took them 90 days. Okay. So the reason I'm bringing that up is because if you remember in earlier slides, veterans for the most part don't have student loans. Okay. Veterans for the most part do not have to worry about student loans. So when it comes to closing faster, veterans don't have this as a possible issue, right? So let's say you have a veteran borrower and you have a non-veteran borrower, both, same situation and everything like that. And they're both buying the house. And let's say we do the CAVers, right? You might find a student loan or government debt in default, and therefore that person is out of pocket for at least until they clear it, which can take up to 90 days. Whereas the VA, for the most part, doesn't have that, right? So you don't have a delay on the VA loan for the most part because they don't have student loans for the most part. Okay. Another one is large unsourced or unseasoned deposits, right? I'm pretty sure you've heard of these kind of situations where a person was not able to close because they made a large deposit into their bank account, so they had to wait for another 30 days or maybe even another 60 days to get new bank statements to show that there was no large deposits, nothing that was unsourced and everything is seasoned. Well, again, the VA doesn't require a down payment, so they don't have to have a large amount of funds in their bank account, right? So for the most part, this doesn't become an issue for the VA, right? Because hopefully they have what they're supposed to have to close, but they don't need to, like start gathering money and start saving money, whatever, because they don't have a large down payment to worry about. Okay, that down payment is a big deal, right? Like having zero down payment is a game changer when it comes to qualification. Okay, and just so you guys understand, a lot of the reason why they might not want to use the down payment is because they might want to use it to pay for overages. Okay, just so you know, right? Because if they don't have to put in money on the down payment, they can actually use it to pay for a shortage in the value, right? So it actually makes you a little bit more competitive as a VA buyer because you don't have to use a large portion of your funds for down payment. You can actually use it to pay for any kind of shortages on the appraisal. Okay, up to a point, right? And that's a case by case basis. Okay, but also they might not want to put money down. But they have it, right? Just because a veteran doesn't want to put money down doesn't mean they don't have the money. They're just exercising their benefit. Okay, but yeah, unsourced or unseasoned deposits happens a lot for non zero down payment situations, right? Whereas for most zero down payment situations, we don't really experience this problem. Okay, so that's another delay, right? It can be up to 60 days if you need two bank statements showing no deposits, right? Credit repair, right? Working on credit repair or credit plans because scores are too low, right? Meaning you pull someone's credit, or maybe their credit got pulled and then they did something wrong and then their credit got lowered, right? So now we have to do credit repair or we have to do credit plan, they have to pay stuff down and they have to wait for the scores to update, right? That's going to cause major delays. Even if you are fast on a rapid rescore, that's still going to delay you at least 5 business days, right? With the VA, there's no credit requirement. Okay, it's lender built if there's a credit requirement, and lenders, like myself, can actually go down to a 580. So you might get denied by whoever for a conventional loan at a 620, 635, maybe even 640. But for us, VA with a 640, you're good to go, right? So because of the lower credit scores, we are more flexible and we're not worried about having to repair credit, right? And I'm going to bring this part up about the manual underwrites, which a lot of people don't understand. A manual underwrite is basically another scenario where if you don't get an automated approval using the automatic underwriting system, we can actually manually underwrite it. Most places don't allow that, right? But a lot of places are willing to do that for the VA or veterans. Okay. So that allows for an even more flexibility when it comes to VAs trying to buy, right? If for whatever reason they don't have the scores or there's no credit, whatever, we can do a manual underwrite and still close the loan. Whereas other people who, non VAs, they would have to literally wait till their credit scores are better before they can move forward. Or if they're under contract, they're screwed, right? There's actually going to be an extension for sure. Whereas we're not so much worried about that with the VA. Okay. If veterans need to take out a loan for a down payment, they can. Okay, that's not the same with most other loans. Okay, and this is technically speaking. Now, I want to bring up a scenario, and I don't want this to become like a confusing part, right? It's almost like a veteran had the down payment to qualify, they had the money, whatever the closing costs, and they go out and they gamble it away, or they spend their money on vacation when there's an emergency situation, and they have to take out a loan, an installment loan is what they call it, right? If they qualify to pay back that installment loan on their debt to income ratio, they can use monies that are borrowed to pay for closing costs and down payment. You can't really do that with any other loan. Okay. So if we get to a point where we need funds, whatever, we can actually have the veteran take out a loan. Like they can go and take a loan out, right? And again, if you read the application, they ask you, is any of your down payment being borrowed? And that's a huge red flag. But the VA is actually allowed. Okay. So yeah, this is the main one. The VA loan is originated by veteran. If the VA loan is originated by veteran mortgage advisors, okay. A lot of the reasons why VA loans don't close faster or they seem to get tied up, whatever, is because it's not originated correctly. It's not being treated correctly, right? There's things that they don't think about because the VA is definitely very unique, right? I mean, again, you have to understand what's the difference between a VA loan and a typical loan. What's the difference between a VA loan and a typical loan? A typical loan is trying to help people buy houses, but they are required to put they're required to put skin in the game, right? They're required to put something down for equity to sort of guarantee that they won't just walk away, right? This happened a lot in the car business, right? Why do they make people who have bad credit scores put a larger down payment? Because they don't want people to default. They don't want people to get their car repoed. If a person with bad credit who's known to not make their payments buys a car, they want to make sure that if this person takes this car and they don't make their payments, um, I'm sorry, they want to make sure that if this people buys a car, they're known not to make their payments, whatever, they're going to lose something out of it, right? So it's like saying if you're willing to put $5,000 down, there's a high chance you're going to make your payments. You're not going to let the car get repo because you already have something invested. You have skin in the game, like they said, right? Whereas if we give you this car for $0 down, you have no skin in the game. So if you don't like the car, you can just let it go. You can just let it get repoed and you don't care because you didn't really put anything out into it. And the worst thing that can happen to you is your credit score gets dinged, but your credit score sucks anyway, so you don't care, right? So that's like the attitude of a lot of people with bad credit. So the reason why they make people put down payment because it's almost like it'll be painful for them to not make their payments because they already have something invested into it, right? They're I wouldn't call it all in, but they're pot committed. They've actually put some money into it, and it will be a shame if they were to not be able to recoup it. So that's why it encourages them to keep the house, right? Well, the VA, they're not requiring that because they already put skin in the game. Their skin was their actual skin, right? Like their actual life, their actual body, right? They signed their body off to the U.S. government and said, do what you believe is necessary to help you achieve your goals, Mr. Government or Uncle Sam, whatever. I'm signing my body off to you, right? So they've already provided for their down payment. They already provide their skin in the game, right? And the VA is rewarding them by saying, you know what, because you actually put your life on the line, you put your health on the line, you put your body on the line, we're going to guarantee your loan. So therefore, if the loan were to default, don't worry about it. We got it covered. We don't need you to put skin in the game because you already did it for us. So we're going to pay you back by guaranteeing your loan for you. Okay. That's the whole point of the VA loan. So the reason I'm bringing this up is because it's approached that way, it's totally different. It's there's different guidelines, different rules, different expectations that are not your typical FHA conventional and USDA type loan products, right? So it takes a person who is really in tune with the VA loan to do a good job in helping you qualify and close VA loans effectively and quickly, right? And the general consensus is that most people don't know what they're doing when it comes to VA loan. That's why if you look at the statistics, 33% of the people who have a mortgage who are veterans don't have they don't have a VA loan. Or actually, no, 33% didn't know that the VA loan existed. Why? Because those 33% of the loan officers were choose chicken shit to talk about it. They didn't know they didn't know enough about it. Or they thought they thought they couldn't even do it, which is not true, right? You can do the VA loan. Like a lender can originate a VA loan if they wanted to, right? But they decide not to because they don't know how to do it, right? So that right there shows a lack of information, a lack of education on the VA loan. Okay. And the VA and the lenders who do the VA loan, they're just doing a horrible job in general. Okay. Again, out of all the people who apply for VA for a mortgage who are veterans, only 46% of them even talked about the VA loan, right? So that should say something to you. Okay. It really makes a difference who does the loan when it comes to VA loan. So the stigma of VA loans not closing as fast is because the VA loans being abused, is being done incorrectly by people who don't know what they're doing. It's not because the VA loan is in itself is a loan that takes longer to close. It's because the people that are employing the VA loan is doing a bad job. Okay, so that's kind of my way of saying you're wrong. You're making a mistake thinking the VA loan doesn't close as fast as the loans. It's because of people screwing up in the past. That's why the VA loan doesn't close as fast, not because the VA loan itself takes longer to close. Okay. Hopefully that makes sense. So again, the myth that VA loans take longer to close. Actually, I'm supposed to put busted, so I'm going to do that right now. I don't know if I can do that right now on the presentation. Yeah, I'm going to do it right now. Boom. Busted. So yeah. Does anybody have any questions on what I just presented? You can put it in the chat or you can unmute. All right. Does anybody have any ahas or takeaways or something they learned that they didn't know that they want to share so we can help the rest of the class who may not have either paid attention or came in late? Anybody? I'm gonna make this awkward. I'm gonna wait to see for a little bit. I'm not gonna call anyone out or anything like that, but I'm gonna wait to see if anyone is willing to break the silence. Oh wait, I got a chat. Okay, Tina wants to know, and I'm gonna open the chat. Explain the VA funding fee versus down payment with conventional. Okay, so the VA funding fee is a fee that is designed to be a part of every VA loan. Okay, so it's not a down payment; it's a fee that you pay to get the VA loan, right? And I don't want to use public math because two reasons. Number one, I don't memorize everything, and number two, it might be changing. But uh, it's a certain amount that you when you use it for the first time, and it actually changes when you use it subsequently, right? It actually increases. Okay, but it's a fee that you pay. Is it's like I mean, I don't even want to compare it to anything, but I mean, if you really want to compare it to something, it's almost like mortgage insurance, but it's not mortgage insurance. Okay, uh, but it's a fee that you have to pay just to get used to VA loan. Okay, totally different from a conventional down payment. Conventional down payment is putting money towards equity of a home, right? So let's say you're buying a house and uh, you want to put something down. You're going to put 5% down. Basically, what you're doing is you're guaranteeing 5% equity, right? And that's a requirement, anyways. Actually, the requirement is 3% if you're going to use the home ready loan, depending on who you are and what you're doing. But let's say 5% is a requirement to do a normal conventional. Then what you do is you're actually how do I you you're basically covering 5% of the equity of your property that it's not going anywhere. You're not really being charged for it. You're buying it, but you're not being charged for it. So it's almost like a trade. You're actually shifting money around, right? 5,000 or 5% of what you have in the bank is now has become 5% of what you have in the equity of your home. So there's no fee. You're not paying anything. You're not being charged anything. It doesn't go to anybody. It goes to you, right? Because you own the home, right? So that's why it's not considered a fee and it's not considered something that you're losing, right? You're not really paying anyone for that. You're actually paying yourself for that. You're just investing it into something else. Look at it like bank accounts. You have Chase or Wells Fargo or whatever bank you use, and then you have the bank of your house. You're basically just transferring $5,000 or 5% from your bank to 5% into the bank of your house. That's basically what a down payment is. Whereas a funding fee is not that. Funding fee is a fee that you're paying. It doesn't go towards equity at all. Did that answer your question? I hope. Tina, thank you for asking. But yeah, okay. Tina says thank you. So again, I want to repeat the question. She said, can you explain the VA funding fee versus the down payment with conventional? And she says, thank you. No, thank you. I really appreciate you asking that question. And maybe I'll talk about that a little bit in my next class, right? Okay, so this person, Facebook user, I don't know who you are, says, I do so many VA loans each year. When I hear a listing agent say these things, I educate them so they can probably present my offer or ask to present my own offer. And I agree with that. And I'm assuming you are a lender, right? I agree with that. I think that this is the thing. Good news spreads slow, bad news spreads fast, right? So we hear all these nightmares of VA loans, going wrong or not closing, whatever, or we hear about VA appraisals not appraising. That's the same everywhere, right? That's the same everywhere. It's just the fact that the VA is such a niche product. You hear about it faster. I mean, if you think about ratios, I'm pretty sure the amount of VA loans that don't appraise or VA properties that don't appraise is the same thing with conventional that doesn't appraise. Same thing with FHA that doesn't appraise. I mean, there's probably a very small uh, margin of error there, right? But you don't hear about those because the VA is very specific, right? But again, with the good news and the bad news, you're going to hear about the bad stuff with the VA loan, but you're never going to hear about the good news or the good stuff that happened to the VA. Because I mean, no, my mom has a saying that she taught me when I was like in college, and it's like one of the best lessons she's ever taught me. She said, uh, "Do something right, nobody ever remembers. Do something wrong, nobody ever forgets." Right, and that kind of is what I think happened to the VA loan. Right, the VA loan is a great loan, and when it closes smoothly, no one really talks about it, no one really thinks about it, no one really says anything about it. Right, but when the VA goes wrong, oh, it's the VA loan. The VA loan is the reason why. Right, I knew I should accept that VA offer. Whereas I'm pretty sure you've had a lot of loans that are conventional and FHA that didn't go through either, but you're not really thinking about that. You're not really talking about that because those are normal, generic bread and butter loans, and the VA is a little bit of a specialty, even though it's big enough to be part of the bread and butter, right? But because it only applies to a certain amount, and I think the VA also gets a bad rep because of the no down payment thing, right? They think, okay, well, since there's no down payment, they're bad. They're bad borrowers. They're not qualified, and that's just simply not the case. It's not true. Uh, the statistics show that a lot of VA borrowers actually have more funds in general as a household than normal borrowers. They have more funds and they make more income. They just don't have to put it down. So they why should they? Right? Like I'll actually share a slide real quick to show you what I mean. And I'm pretty sure it's in here because I remember seeing it. I skipped over it. Yeah, right here. See, it says that oh no, that's not about portfolio performance. Well, I guess I must have deleted the slide. But here it shows that one of the reasons why we do like the VA loan is because they just perform better when it comes to default rate. They have a less than 2% default rate, whereas conventional has above 2%, and FHA has almost 9%, or actually above 9%, right? So the VA just performed better. So that should tell you that the VA borrowers are more qualified. They probably have better income. And I don't know about funds, but it definitely shows that they're more responsible. they they actually pay their bills, right? It's just I brought it up, and it's not like we have like a timeline that we follow. Okay, so the median FICO score for an FHA buyer is 620, whereas for veteran is 736. The median household income for a FHA buyer is 68,703, and for VA is 90,156. The median average loan amount is 232,773 for FHA buyer, and the average loan amount for a VA buyer is 304,844. Okay. In general, the median FICO score for VA or veterans is 720. The median liquid assets as in how much money they have available if they wanted to put it down, is 17,000. That means some people have zero and some people have like 34,000. Okay. So again, to think that because they're buying with a VA loan means they have no money, it's not true. Okay. They have the money, they just don't need to use it, right? Because the VA allows for them to not have to use it. Okay. So it's a misconception, I believe, whenever people think, oh, well, I don't know if I should accept the VA borrower. They have no money. They have no skin in the game. Well, no, they have skin in the game. They put their actual skin in the game, right? That's why they're getting someone to hook them up, right? With the 0% guarantee towards their loan. But they might have money. You just don't know about it because you don't need to know about it, right? And that tells me that there's an advantage because if they need to pay for something extra, they can't, right? Whereas a lot of people who are going with a regular loan, whatever they put down, that's basically all they have. They don't really have a lot of overages to cover any kind of extra money that they need to pay. It looks like someone asked a question. Georgette asked, for sourcing deposits, unseasoned, is it any or is there a minimum amount? Okay, so I'm glad you asked that question. And I hate doing public math. And what I mean by that is I hate trying to guess what the numbers are, right? Go ahead and hold on 1 second here. It's not my share. Okay. So again, the question is, Georgette asks, for sourcing deposits that are unseasoned, is it any or is there a minimum amount, i.e., 5,000 or greater? From my experience, it depends on the percentage compared to your income, right, or your typical deposits. Okay, if it meets a certain amount, then it will be quote unquote red flagged. Okay, Again, I don't have those numbers in my head right now. I probably, if I wasn't under pressure, I probably could think of it real quickly. But I will provide the information either in the comments or send you directly the message. But yeah, there's a certain percentage, right? It's a ratio compared to your income. Okay, so that's how they determine that. So there's no hard or fast number. It's in relation to the income that you're making. Okay. Um, in fact, I will ask the question for someone, my wife, who might be able to answer me while we're on this call, in case we're still on the call and I can answer. Okay. Let me go ahead and just copy and paste. She's really good with these quick questions as well. So let's see if she answers fast enough. She's actually my walking guideline book. So if I don't know something, I ask her. She can give me the answer. It's funny because when it comes to VA, sometimes I actually know more than she does, but she will never admit it. Like if I tell her something that she didn't know and she disagrees with me and I show her the guideline, and I show that I'm right, she'll just ghost me. Like she just won't answer. She'll just pretend like she didn't see it and she'll ask another question and act like she didn't see the proof that I was right. So yeah, we'll see if she answers. Does anybody else have a question? And of course, if I didn't have this call, I would actually be looking it up right now, and or asking other senior loan officers. But yeah, that's usually the way that its answer is. It depends on how much they make in terms of income. Any other questions? I actually might make that a class. That's a kind of a cool class, interesting class. Like, how do you handle deposits? How do you handle assets? Maybe I can talk about gift funds and such, and I can talk about potential uh, sources of down payment. Like money in the stock market or cryptocurrency. Or that might be an interesting class to sort of go over. And I'm trying to get back to where I was at. I think we're actually at the end here. Yes. Does anybody have any questions or any comments or any ahas? Uh, Maybe you learned something today. What's your favorite part of the presentation or feedback? I welcome feedback as well. I don't want you guys to think that you're not allowed to, you know, give me an honest opinion as to what you think about the class or the information I provided. Check the chat. Doesn't look like there's anything yet. Other than the one that Georgette asked. Doesn't look like my wife's paying attention. She's probably busy. So yeah, I'm gonna go ahead and end the call right now. But again, Georgette, I'll answer the question. And you know what? I'll actually send the answer via email to everybody because I'm pretty sure some people are also wondering. And I feel bad that I don't know the answer at the top of my head. But I definitely will give you the answer when I send out the slides so that at least we can address that one question. Okay. And again, that might be a good question for me to address in the call, which will force me to do research and actually know the answers, right? No problem, Georgette. I appreciate that. All right. So again, the VA home loan is the loan that other buyers can only dream of obtaining. You've earned this right by serving our great nation, and it's my job to facilitate your dream of homeownership. Thank you for your service. And again, if you have any questions, you always reach out to me. My name is Larry Lee. I'm a veteran mortgage advisor, certified veteran mortgage advisor. I have a certificate, right? And my cell number is 832-606-2193. You can always call or text anytime. My email is lle@Van Dyke Mortgage. That's my first initial, my last name. So LLE at Van Dyke. There's no E in Van Dyke. People make that mistake a lot. So it's 6 letters, VanDykeMortgage.com. And you can always go to LarryLee.com if you want more information, either about these classes, about my YouTube channels, um, about any kind of resource that I provide for free for home buyers as well as real estate agents. And worst case scenario, you can always Google me, Larry Lee, or Larry the Mortgage Guy, or Larry in Dallas, Texas, or actually Larry Lender in Dallas, Texas, and you'll probably find information about me if you forget all this other information, right? But either way, I really appreciate you guys being on this call. And again, if you have any questions, you can always reach out to me anytime. Okay.